Are you thinking about refinancing in 2024 and you're unsure whether you should do it now or wait for rates to further go down? This is a phenomenal question, one I get quite often. One I feel like I'm an expert and able to answer because I did hundreds of millions in refinance in 20 and 21. I think the same advice we were giving then as interest rates were coming down is the same advice I'm going to give today. So stay tuned. Not only am I going to give you advice on what you should do based on different scenarios, I'm going to actually show you a scenario, show you a break-even analysis and what you should be doing if you're considering refinance. With the best mortgage brokers, you're going to have somebody do this for you, show you the break-even analysis, but you should be able to do this quite easily on your own. Stay tuned. All right, Matt Gouget, Matt the Mortgage Guy, powered by You Mortgage, talking refinance. And as somebody who has funded hundreds of millions of refinance and a self-proclaimed math nerd, not only do I love these refinance scenarios, I love helping people win. And if you're saving hundreds of dollars on your mortgage every single month, if you're able to break even and have this thing pay for itself in a 7, 8, 10-month period, you're absolutely winning with a refinance. So stay tuned. In this video, I'm going to go over whether you should refinance now, or maybe with the way things look like they're heading as far as mortgage interest rates go, they're going down, whether you should wait. It's all math and it's all solvable. Stay tuned. I'm going to go over it. Before I get into a scenario where I show you break-even analysis and all that, what I will tell you is the bigger your loan amount, the more likely it is that a small rate decrease is going to be beneficial to you and break even more soon. Now, what does that mean in layman's terms? If you've got an $800,000 loan and you're going from 7% to 6.5%, it doesn't seem like a lot. It's only 0.5%, but 0.5% on $800,000 is $4,000 a year in interest. If you can save $4,000 a year on something that, as we look at the numbers, might cost you $3,600 in baked in fees, that's going to break even in 9 to 10 months, right? And so that might make sense, whereas you might only owe $110,000 on your mortgage, and you might have the opportunity to go from 7% down to 6%. Now, 1% on $110,000 is only $1,100 a year. So it's going to be years before you can recoup the cost of a refinance, if the cost of a refinance is determined to be, and watch, I'll show you costs because nothing's free, $2,000, $3,000, $4,000, right? And so that's what you have to think about is, what is the cost for this refinance? How long does it take me to recoup this cost? Is it worth it for me to do it now, or should I wait until the math makes more sense? I'll show you an example and I hope it helps make more sense. So in this example, which I'm going to pull up on the screen, I've got a current mortgage with a $3,860 a month payment. And I'm looking at a 6.249% interest rate and asking myself, does it make sense? Now, here it is. I've got this highlighted up here in the upper right. Current payment, $3,860 a month. That was with, an original interest rate of about 7.2% on a loan that was in the $570,000 range. So if it was $568,000 to pay this loan off, and we were going to bake in the costs, meaning no cash to close on this refinance, we're just going to kind of bake it into our new loan, and we're able to get this client a 6.249%. Does it make sense for them to refinance? And again, my point is, it's all math, in my opinion. You just do the analysis and say, does this make sense? Do I plan on staying in this house for a certain length of time? And here's a caveat that some people might not consider. Just because you refinance today doesn't mean you can't refinance in 12 months. If you're shown a scenario where you can go down to 6.249%, you will recoup the costs of the refinance within 9 months, and then you're able to get a 5.25 12 months from now. Well, then go ahead and do it. That's exactly what we were doing in 2019, 20, and 21. We refinance from a 5% down to a 4%. They save $550 a month on a, $900,000 mortgage. And then when the rates went from 4 and we could get that same client a 2.875, we refinanced it again. We don't know where the bottom is. You don't know where the bottom is. So if you refinance, you're in a great position. It pays for itself within 9 months. If rates never go lower, no harm, no foul. If they do, and it makes sense again, then you refinance it again. So in this scenario, $38.60 a month is the old loan. The new loan is $35.25. I'm not using taxes and insurance here. That muddies the water a little bit, where some people are looking at different numbers. Some online lenders might show you some bad quotes because they're guesstimating tax and insurance lower than what the true payments are. Just doing it with principal interest makes it a lot cleaner and easier. More on that with a personal consult. Go to greatmortgagebroker.com, connect with me and my team. We'll help you sort out all the mess and all the things you're going to see online. So in this case, this 6.249, just for example purposes, not an offer to lend, costs $800 to get that rate. We're paying the underwriting fee. There's a $795 processing fee. We've got some appraisal costs. Some refinances don't require that, but we'll throw it in there just in case. Then you got about $1,000 from the title company. So all in, we got about $3,500 costs up in that first 3 boxes on what will be a loan estimate once you get it. You've got recording fees. You've got prepaid interest. I wouldn't necessarily factor in these days of interest because you're going to pay them whether you're in the new loan or the old one. So what I might even do here is I want to take that $500 out. I just don't think that it's necessarily, if you're, it's not part of the cost. I'm keeping in the recording fees. I'm keeping in every other cost, right? I'm trying to make this as fair as possible. So $335 is the monthly savings on this particular scenario, right? And so what I'm trying to solve for is here's all the costs, $38.79 in cost divided by $335 a month in savings. This deal is going to break even in 11.56 months. So here's the question you ask, and here's what the conversation revolves around. Am I staying in this home for at least 12 months? Yes. Okay, proceed to step number 2. Maybe you're in a position where you think rates are going down. I happen to agree with that, right? And so you might tell yourself, well, I don't know, maybe I'll just wait. Maybe in 9 months, I'll get myself a 5.5. That's fine. But like I said previously, you can do both. You can refinance now and refinance again. Will you pay this stuff again? Yes, right? Nothing's free. If someone tells you that the title costs are free, that anything else is free, it's being baked in. If they're claiming to pay for the processing fee or there's no points for a specific rate, whatever the case may be, they're just baking it in. It's somewhere. I promise you that. I've made tons of videos on that. So with this calculation I'm doing, you wait. You say, you know what? I don't know. And rates go to 5.899. Now you're saving $465 a month on this same loan. And we scroll down here and it's breaking even in 8 months. Now, this is one of those where if we're talking 2020 and 21 and we're having a conversation, people were doing refinances with break-even analysis. Some say 3 years. Rates were great and going down, so we were doing it like under 24 months. It makes sense. If this is breaking even in 8 months, it's an absolute no-brainer. Like, you do this. And like I said, you refinance to 5.899, you're saving $465 a month, $33.95 is your principal and interest. If rates continue to go down, nobody has a crystal ball, but they do, and now you're paying $33.95. Hope I don't mess things up. $33.95. And we get down to $475. We do the same Oh, this is $33.95. $33.95. Do the same calculations. And going down to 475, you're saving $400 a month. And that's going to break even 9 months. So you do it again at 4.75. We don't know. Rates might not go that low. Along the way, there is going to be people that refinance in 2024 and again in 2025. If you wait and you don't do it in 2025, I'm not going to yell at you. I'm not going to be upset. But what I'm saying is don't let the fact that mortgage interest rates are going down stop you from doing the initial refi. If there's a place you plan on staying in, if you can show that it's going to pay for itself in under 12 months, it's an absolute go. As we get closer, what is likely the bottom, and you're planning on staying in a house for 6 years, 8 years, 10 years, then you probably can justify a 2-year break even or even a 3-year break even if you plan to set it and forget it. So anyhow, that's some of the reasoning, some of the analysis I do with my clients when we're looking at refinance. So if you're looking to at least go through the numbers, kind of see what it looks like for you in your personal scenario, feel free to go to greatmortgagebroker.com. You'll connect with me and the team depending on what state you're in. You might work with myself. You might work closely with Michelle. You might work with Connor. You might work with Bo. Wherever you're at, we've got a solution for you. We're in 48 states. Greatmortgagebroker.com. Look forward to talking to you soon. Bye-bye.